Hey guys, welcome back to another lesson where we are learning how to prepare yourself for every single trading day. Yesterday or the previous video, we talked about how to analyze the market, the S&P, the Nasdaq, the Dow Jones, the VIX, in order to trade properly. And today we will continue our session. Like I've mentioned in the previous video, we have several of topics to cover. So in each video, we will focus on a specific topic, and then we will do a summary to sum up everything and to see how it actually turns into a real market preparation where you can actually trade and find the right stocks to trade, analyze the market correctly, and then actually trade the right assets. So let's start. Give me 6 hours to chop down a tree. I will spend the first 4 hours sharpening up the axe. So this is exactly what we are aiming to do. The better preparation you will have, the better result. It's super simple, just like that. Give yourself time to prepare correctly, know exactly what you're doing. And from that point, the trading part will be much easier. Most people are actually trading without even tiny bit of preparation, and even if they're looking for the right stock, let's say, they're not working according to the right steps, and then therefore they are doing it wrong, simply as that. So today we are going to talk about the scanners, understanding what it actually means, why do we need them, what types of scanners do we have, etc. So let's jump to the scanners, to the platform. First, just before we'll talk about that, I want to show you a reminder of what we discussed in the previous lesson regarding the market analysis, because it literally was yesterday when I recorded it, and the market did just almost 100% of what we expected. So this is a great opportunity to learn from. So we're looking at the Nasdaq, the S&P right here, VIX, and YM, the Dow Jones, exactly as we covered on our previous lesson. And what we talked about yesterday, that if we're looking, let's say, a 15-minute chart, what we wanted to see is basically a move, exactly what we got. We said that if the price will continue higher and drop, there will be probably buyers coming in at this area, pushing all the way up to the resistance level, and from that point you can either short the market, or you can look for shortable stocks that looking pretty much like the market, or had a nice gap down, and from that point taking the stock, shorting the stocks basically. So this is perfectly exactly what we covered yesterday when we talked about the market analysis. And this is it's not just showing off, obviously, and telling you, look, I was right. It's about learning that if we know how to analyze the market correctly, then we can easily trade with the right direction and finding the right assets to trade. So this is super important. Continue to practice it. If you have, obviously, any questions, feel free to send us. So let's talk about the scanners. So at the moment, I'm using a scanner from the TD Ameritrade platform, but you can easily use the same platform that we have, the TTP platform, to do the same things with the scanners. So maybe before the scanner, let's talk about understanding what we are looking for. We're basically looking for stocks that are gapping up or gapping down, have a nice momentum of volume and volatility that coming in, right? Because we are looking for day trading, so we don't want to see a stock that is flat moving sideways. We actually want to see a stock that moving either with a specific one direction to the upside or to the downside, or maybe to trade it with the trend, or the opposite direction when it will reach, like the example here on the Nasdaq, moving higher, reaching a resistance level, and then a counter trend, something like a false break. So either way, we are looking for stocks that have a lot of volume, and volume, for those of you who are new to trading stocks, volume is the number of shares switching hands between buyers and sellers or on any given time. So a lot of volume, because we want it to be liquidity. We want it to be liquid, so we can buy and sell easily with tiny as possible spread between the bid and the ask. And we also want it to be volatile, meaning moving strongly in the pre-market, 3%, 4%, 5% and above, either gapping up or dropping down, gapping down. We want to see something major going on. And obviously on the next lesson, when we will cover the news topic, we will talk about that as well. But the first thing you can do is just go, again, any platform that you will use to scan or analyze. You can go for the one that gapping up or gapping down, either change gainers, like the top gainers, the top losers, and it will show you the stocks that are actually moving the most a strong momentum move. It doesn't mean that you will see a lot of volume, but you will see the move, at least in this scanner. At this moment, since we're before market open, I will go to a different scanner that show me pre-market movers. So if I'm looking at the pre-market mover scanner, and again, you can find it in any kind of platform. You also have it on the TTP platform, so you can use it from there. You can use TradingView if you like, or a FinViz if you have a paid account there. So any way you like, but just look for the one that's moving strongly. So as you can see, for example, ADGI is moving almost $2 up. It's a $3 stock, so it's moving $2 up, pretty significant, with a 15 million, almost 16 million volume. And now when I'm clicking ADGI, you will see it in the back. I will head the pre-market and you will see what actually been done. So from 3.8 all the way to $7, then dropping, correcting, pulling back to the 5-6 area. So that is looking pretty good. Obviously, this is not the only parameters that we need, but for the beginning or for what we're looking at, this is definitely something that the scanner gave us a right thing to look at as the scanner showing us. So we are looking for volume, we are looking for a strong momentum move. And one of the scanners you can use, the simplest one, but definitely doing the job, is the one with the top gainers and top losers, and you can use it all along the way, even for the beginning of the trading session, and also if you're trading the second session of the evening, basically in the US, or the afternoon in the US. So you can definitely use that. Another scanner that you can use is actually customizing scanners. Again, depends on which platform here, depends on which platform do you use. But in most cases, in most platforms, you will have the opportunity to build your own scanner and customize it. So for example, I have a scanner that's showing me stocks that is gapping up or gapping down below or above 200 EMA. Let's get into that scanner. You can see here that the last price of the stock will be a minimum of $20. The top range will be $300. If I'm scrolling down just a bit, the volume is between 200,000 to 100 million. Again, volume is the number of shares switching hands from buyers to seller on any given moment. The study here that I added is ATR is greater than 1. ATR is average true range, basically the range that the stock can perform, so above 1. in the daily. We also have the extra parameter that I added regarding the 200 EMA moving average. So the close above exponential 200 moving average, because I'm looking to long those stocks. So when I'm looking to, for example, when I'm getting stocks from this scanner, I can actually know or get in the another V in my checklist that this stocks is gapping up or closing above 200 EMA. It will give us a lot of pump, because a lot of institutions, traders, actually working with these 200 EMA, hedge funds and etc. And when they see that the price is crossing 200 EMA, they usually go long. And when they do that, a lot of other algos and retail traders doing the same. So we're getting a lot of momentum to the upside. So this is actually one of my favorite scanner when I'm looking to long something that is above 200 EMA. Obviously, not just clicking the keyboard as soon as it closes above it. We got a lot of parameters to give us the last V in the checklist in order to get in the trade. But this one is definitely a good one to start with. The same thing I have for the downside, so below 200 EMA. So you got exactly the same parameter. The only thing that different is that we're closing below the 200 exponential moving average on a 1H, on a 1 hour chart. Now, when you're playing with it, obviously in time you will find your own niche, and you will find what exactly is good for you, right for you, depending on your stats, depending on your back test. So, or depending on your experience, you're watching the charts moving day in and day out, and you know that when it's gapping up above 200, for example, you should see a nice extra momentum move, for example. Other scanners that you can play with could be specific ones like the MACD. So, for example, the MACD is an indicator showing the deviation or diversion between two lows or two highs. So basically, if you're working with some of your indicators, RSI, ADX, or whatever, you can build a scanner that actually performing according to that, and then get the right stocks to trade. If again you're working with some of those indicators. I have a long one and short one showing me also stocks that moving higher, very similar to the one in that we saw earlier, the gainers and losers. Those are watch lists, so like follow-up earnings and so on. So basically, as soon as you have your own idea, either backtest or experience or just a hunch of what can give you the right stocks that is about to explode to the upside, downside, or maybe reaching a major support level, resistance level, then you can customize any scanners that you like, and it will definitely help you. Usually when I'm trading, either before market open, when I'm basically preparing myself, I will go to the pre-market scanner, then we'll go to the S&P, just run a little bit, just quick run on the 500 of the S&P or the NASDAQ, looking for the one that is exploding, and also look in Twitter and stuff like that, and maybe see some activity in the social media area. So stock tweets, Twitter, those kind of, maybe Facebook, Telegram groups. Just remember, and this is a very important one, remember that if you are, and this is maybe why I'm trying to teach you how to prepare yourself to the market, to the trading day better, because you don't want to really rely on a specific source like Twitter. There are a lot of, we also in TTP posting on Instagram, for example, the stocks for today, hot stocks for today, and that's fine. you can go there and just get the stocks, but if you know how to do it by yourself, you won't have to rely on others. So in case you're looking at Twitter and getting some notes from other channels, at the end, if this channel will decide not to show you today his hot stocks or maybe charge you or whatever, in this case you will be stuck and you won't have any asset to trade on. So make sure you learn how to find those stocks and how to prepare yourself better to the market instead of relying on a source that will supply you the specific symbol to trade. I hope it makes sense. So that's it for this lesson. I hope it will work for your advantage. If you have any questions, obviously send us an email, Discord, you name it, and I will see you on our next lesson. Take care.